Welcome to the WAN Manager Podcast. I am your host, Bryan, as always, and this is the show where we talk to networking experts about the data services that make business possible. So when we're talking about cloud and digital transformation of the enterprise, it's always useful to come back to the fact that physical geography still very much matters in the digital world. So when you're moving the data center off premises or shifting data and workloads to the cloud, it doesn't actually make anything dematerialize. You still need wires that connect to servers that sit in a rack at a hyperscaler or neutral data center facility. So more than ever, enterprises need to understand the market and the landscape and pricing structure at what we once called colocation facilities. And back then, and my guests can correct me if I'm wrong on this, but they were mainly really only interesting to service providers and ISPs. Now that world has greatly expanded over the past few years. So to help us navigate through all of the data center operators and pricing, we have our resident telegeography expert on data centers, Jon Hjembo. Welcome, Jon.
Thanks, Greg. Good to be here.
You know, Jon, not all telegeographers have a map sitting behind them in their little work from home tableau, and I'm going to commend you for doing the right thing. So
thank you. My wife has informed me that this map is very old and I need to replace it. It's getting faded. I should put a new one up, but it's good to have it. Yeah.
Yeah, you know, my map is now very out of date, but I just really liked the design this year. It was 2015, yeah. So yeah.
Absolutely. Same here.
But I'll get a new one of these days. Yeah, so Jon, you have been the principal investigator on our colo/data center now, a research product for, a long time. Why don't you just give us a quick tour of your background and at telegeography, especially?
Yeah, so I came on board here. I guess it's been 13 years ago now. So
wow,
it's incredible. Time has
almost as
really
old
flown.
as me.
I know. I would say I'm catching up, but that's never going to happen. So yeah, but it's been quite a journey, and I was brought in part to build up this specific research area. At the time, we had been updating what was known as our colocation database every 2 years or so. Mm-hmm. And we ramped up coverage and changed the name eventually to Data Center Research Service. And we started covering this market annually and then even more frequently with interim updates, and then adding on our pricing research, which is formally updated biannually. So it's gotten a lot bigger, and we have more and more people involved in it. So it's been great.
Yeah, well, so that cues me up perfectly, I think, for the place where I was going to start here, which is just kind of taking us out over during that time that you've been working on that past decade or so. There's been really big changes, as I alluded to in the intro, in the colocation and now sort of data center market. Could you just take us through the highlights of kind of how that transition happened?
Yeah, there's been quite the seismic changes, I would say. And when I think about that, looking back at when I first started and where we are now, I mean, one of the things that strikes me is that if you look at a list of who the most prominent players are in the market right now, like half of them didn't exist back then. So there's that. And then as part of that transition, I think I'll talk to, I guess, two broad trends, one being carrier neutrality, and the other being the increased role of interconnection within the data center. Mm-hmm. And of course, they go hand in hand. Right. But, traditionally, colocation sites were basically nodes where you could interconnect with your carrier, and they were controlled by carriers. And then, of course, Equinix and others came along and blew up that model, right, and created the carrier neutral model. And we really haven't looked back. But when I started here, the carrier model of data center was still pretty big, and you had a number of carriers who were trying to get into the carrier neutral game. So in 2011, 2012 timeframe, you had several.
Terramark, right?
Yes.
Yeah. I remember some of this. Yeah.
Yeah, you had several major providers. At the time, it was Quest purchased Savis.
Hmm.
Um, the AT&T data centers were quite big. Zayo had their
Right.
own services, and they were all trying to move in a more carrier neutral direction. Then there was a backpedaling, and about 5 or 6 years after that,
Hmm.
and I think this is probably pertinent for your enterprise customers in particular. So you went from a situation where you may go to your carrier to get uh, data center services along with your WAN services to a situation
Hmm.
where you're going to a neutral third party to access your WAN provider along with some other services.
Right.
And so, about 5 or 6 years after you had these carriers buying up carrier neutral providers, you then had this massive divestiture of the same assets and others.
And is that where some of these startups that you mentioned came from? Just sort of,
Oh yeah, absolutely. So you had Sixterra, for example, rise out of that. They ended up buying the CenturyLink assets,
mhm.
and then you had Evoke bought up the AT&T data center assets, and you had all these other operators out there merging and under a more carrier neutral model. And then the biggest recent one was DataBank, which
Mm,
bought out Zcola, which had been operating from a carrier neutral position under Zayo.
right. And has one of the more creative names too, DataBank.
Yeah.
Sorry.
Yes.
Yeah.
Yes. So yeah, that's one of the things is that I think this carrier neutral model definitively won out, and not only that, but by and large, there's been this sense that like let's stick with our core business and our core competencies. So the
Right.
carriers have gone back to just being carriers, and the data
Hmm.
center operators are data center operators. And by the way, some of these new companies that spun up to buy these assets were, of course, run by the very people who had sold them off to the carriers in the first place. So, you
Interesting.
see some of
Yeah.
the Terramark people coming back and
Right.
running some of the operations now after the Verizon assets were sold off, for
Hmm.
example. Um, so yeah, that carrier neutral kind of definitive um, sea change has been really strong in the last 10, 15 years. And then the other thing I guess I would highlight is just the growth of interconnection as this core aspect of what the data center is about. I mean, really, the data center now, far from just being a real estate play, far from just being a building where you put telecom servers, is a network and cloud node. Um,
Right.
and the operators who are successful in this market understand that very well, and are
Hmm.
following the movements in the cloud and networking environments, which is why I especially love tracking this market at a company like TeleGeography, because we very uniquely, I
Cover
think,
both those
cover
markets, right?
both.
Yeah. Yeah. Yeah.
Absolutely.
Yeah, that's a great point, and I mean certainly from the enterprise perspective that I'm more familiar with, you think of neutral data centers as a place to connect with your cloud providers and that kind of thing, much more so than the old school telecom way of thinking about it of places to exchange traffic. So yeah.
Yeah, absolutely.
Interesting. Yeah. All right. So, whenever I go through and read your excellent reports on data centers, I'm always struck by how we make a distinction in those write ups between retail and wholesale data center space. And I know that there's some ties to the reality of the market there, but it always kind of seemed murky to me. Can you kind of sort of flesh out the difference between those, and particularly, of course, where do enterprises interact, right? Yeah, in
Yeah,
that sense.
yeah, it's a good question. And honestly, I think to customers, the only thing they're going to really care about is who can provision their lease requirements.
Right.
The size of lease, the length of lease term they're looking for, along with other specifics to their deployment. But I think for us, it really matters to keep this distinction. I've wrestled with it a little bit because it's a very murky distinction.
Mm-hmm.
But like, let's start with the really simple view, which is that a wholesale lease is a large scale long-term lease, and a retail lease is a short-term, small footprint lease.
Okay,
Relatively
that
speaking,
makes enough sense. Yeah,
right?
yeah.
So you start there, and we measure that in terms of power, because power is the core component that governs the capacity available to customers, so we roughly delineate it as wholesale being half a megawatt or more, and 3 to 5 year leases or more, and retail being about 250 kW or less, and lease lengths of a year or two. There's, of course, significant overlap. There's a gap in the middle there, and there's a lot of gray area where operators play very heavily in both markets.
Right.
There are operators who will look for anchor tenants for a data center that might be on the wholesale level, and then fill in with retail on the side. But the reason I think it's important is that there are fundamentally different market dynamics, for one. And then there's also a great danger in for us as analysts to double count capacity.
Right.
If we kind of assume the capacity for both a retail and wholesale operators together within a given market. Like, for example, even today, Digital Realty and Equinix, who are competitors, one is more wholesale driven in their business, and another is Equinix is more retail driven.
Right.
Equinix is one of Digital Realty's top 10 customers.
Right. Okay. So kind of like in the network world, where you can sort of there are some pure play wholesale telecom providers still. I assume a few out there, right? That sure. And there again, the distinction might become murky, where if I'm the kind of enterprise that has the need for, say, 100G wavelengths, I'm kind of buying in the wholesale market, but it has to do more with sort of like what the purpose of the sale is compared to the actual pricing or whatever.
Yeah, and frankly, there are some really key locations where there would absolutely be kind of a double counting with these two types of operators. But going to kind of the distinctives, unlike a lot of the stuff that we track at TeleGeography, if you look at the network side, of course, the story is often one of price erosion, especially on the carrier side, carrier services. The data center market tends to be a little more buoyant, especially on the retail side,
right?
Because you'll have particular ecosystems that are in extremely high demand always, and they are able to retain fairly high prices, and then there can be, depending on individual market dynamics, there can be long-term price stability. Amongst other retail players too, whereas the wholesale market tends to be a bit more commoditized, and you'll often see, especially when it comes to provisioning wholesale leases for major cloud providers, there can be a desperate scramble for that kind of business, and you'll see the prices absolutely plummet to try to win contracts from major cloud providers. But on the retail side, it tends to be a lot more stable, and you're cramming a lot more customers into a much smaller footprint. And then you have different types of retail offerings, and so like there are, I think, in both the wholesale and the retail markets, there are more interconnection driven data center ecosystems, and then there are some that are more enterprise driven.
And so by enterprise driven, you mean places for offsite to data centers, compute and storage, and that sort of thing.
Yeah. So, like, for example, on the retail side, and really this can get quite blurry, but because of the amount of space available at a particular location and what the operator is willing to provide to an enterprise client, but you'll typically have clusters of data centers targeted towards enterprise outside of an urban center where the land is a bit cheaper. You still have relatively quick access via dedicated connectivity to the cloud platforms that are in more dense locations,
Right.
but you're set back a little further from the prime real estate. Whereas the prime real estate is a very if you look at the urban centers, this is where you have these things that we call carrier hotels.
Right.
And these are still very much like this core part of where the internet ecosystem converges.
Yeah, and the names that we know offhand, like One Wilshire and stuff.
Well, I was just going to say, like, if you're a peering manager or anybody in the network world, a carrier hotel by its street address. I mean,
right.
These are these places that networks from all over the world have to have a small footprint to interconnect with each other, to interconnect with the cloud platforms.
But you would be foolish as an enterprise to store your servers there, for example. Yeah,
those places are all but irrelevant for consideration. For deploying resources for an enterprise, they would be looking at places in the suburbs. Out if you're in the London market, for example, Ashburn, or in the London market out in Slough or Woking, or somewhere to the northeast or something like that. So that's kind of why there's a real distinction in terms of the market dynamic, in terms of what they're covering, and also in the interest of not double counting capacity, we like to keep those as separate as possible. Of course, companies like Digital Realty really throw us off when it comes to that, and others, because they've actually bought absolute key retail colocation providers. Digital Realty bought Telex several years back, and then more recently Interaction in Europe, and they very much play in both markets. Equinix is spilling over into the wholesale market with its xScale venture, trying to sort of keep things on campus, both with the larger scale leases and the smaller scale leases. But by and large, there's still a very relevant degree of separation.
Yeah, that's actually the most helpful explanation I've gotten. So I'm glad you came on the show.
Hey,
I tried to work through that a few times. So let's move on to our favorite topic across all of us analysts, geography, a little bit, right? So the development of data centers follows what you might expect, being in the largest commercial hubs around the world, kind of like you just mentioned, that some of those core sort of locations, but just broadly speaking, right? Like everything we do, when you put it on a map, it looks like a population map, or as you're fond of pointing out, the shipping maps around the world match the telecom maps, right? Yeah,
absolutely.
So but I wonder if you could just take us through, even if some of these places might be obvious, the places that are most well linked by fiber, terrestrial, subcable, I assume are where the key data centers would come up. But when I've looked at it, doesn't correlate perfectly. In other words, where there's the most submarine cables landing is not necessarily the place where you see the key data center. So specifically, I was thinking of what I just mentioned, like Ashburn outperforms New York City data center wise, even though there's a bigger concentration of GDP and fiber in New York City, right? Like Secaucus and lots of, there's only a couple landings in Virginia. I'm out of the subcable game, better than me, but so can you sort of take us through what are the really key markets in the data center colocation kind of space, and why are they where they are?
Well, it does very largely correlate with where you find centers of commerce and communication, centers of finance, commerce, and communication. And of course, those are not necessarily population hubs. They may or may not be. There are major, highly populated markets around the world that are extremely underserved. And so it really does correlate, I think.
And you mean that even say within developed, so that's not comparing, say, a less developed market to a developed market, but even within the developed world, there's population centers that haven't become internet centers per se.
Yeah, that's true. But I was kind of speaking to the former too.
I see. Okay.
Yeah, but which it's and a lot of that has to do with where you go to interconnect with the global economy. And so ultimately you have these, telegeography had this old bound study, like hard copy book that we published called Hubs and Spokes.
I remember that. Yeah.
Right. So I have a copy of it over there, not within arm's reach, but if you think of the notion of hubs and spokes geographically, you have these converging points for communications, for commerce, for business, and from there you have these spokes, these branches going out to really natural geographic subnodes that are within the orbit of those hubs. And so there's a natural relationship there. And the same is absolutely true in this market. And gosh, before I list them off, it's a really key point about it not necessarily being where the sub cables are, because if we think about like what this is really about, it's about interconnecting at the points of commercial and communications convergence, so the sub cables are just a piece of the overall network puzzle that gets you where you're going. So the landings do not necessarily coincide with where you're ultimately trying to reach. They're just perhaps the shortest route to get to that ultimate destination, and they are they're just a segment along with the terrestrial component to get to where you need to be. And that's really important to keep in mind, because I think there's been a lot of attempt in the industry to try to counter that and say, no, if this is where the cables are, we should try to build up, a data center ecosystem here. And in a very few isolated cases, that's worked out great, but it doesn't always happen that way. But at any rate, so let's start with Asia and Europe, because it's more limited and easier to define. In Asia, it's traditionally been Singapore and Hong Kong, and to some degree Tokyo, which has always been more of a formal and sort of domestic-driven market. So the real international centers have been Hong Kong and Singapore, which is really interesting now because both are dealing with some issues that are causing some self-examination in the industry about overdependence on those markets. In Europe, it's the flap markets, the so-called flaps: Frankfurt, London, Amsterdam, and Paris. Those have been the centers, and depending on where your sphere of influence is, you're going to try to get to those markets traditionally. They're traditional endpoints of transatlantic communications. They are traditional endpoints for network capacity coming from the Middle East and North Africa, East Asia, and so forth.
But that's a great example. Like, Frankfurt's not a particularly big population for European city, but is kind of the home of the euro and that sort of thing. So yeah. So
in the U.S., it's traditionally been a little more decentralized. You have more major hubs than you do in other parts of the world, and then you also have some secondary markets that have gotten so big that they could almost be considered primary hubs. But if I was to kind of succinctly say, here are the major ones. You got a couple on the west, in the middle, and then the east. On the west, you have Silicon Valley and LA. In the middle, you have Chicago in the north, Dallas in the south. And on the east, you have primarily New York and Ashburn. And then there's some others that are getting quite big as well. But those would be kind of the primary ones.
So I know we've been tracking all of these cities and whatnot for a long enough time to really have a big view of how the growth has played out globally around the world. Where has the growth really been focused in the last few years, and where do you think we're going to see the most activity over the next coming few years?
Yeah, so I think we're going to see a continuation of what we've seen in the last few years. So I'm going to just kind of address both aspects of that really together.
That's the prognosticator's best tool. Is where are we going? Let's look right behind us. Right?
So there's been a lot of talk about the edge, and perhaps you and your listeners have heard talk in various outlets about the edge and how it's going to kind of take over everything. And I think in the early days of edge, there was this sense that the whole paradigm of the data center could be upended, and you're going to suddenly have these scads of data centers like all over these little nodes. That thankfully,
the distributed network and data center not going to happen.
Well, and if it does, it's going to be for very niche applications on small scale, and it's not going to fundamentally change a lot of how we configure networks geographically. Right.
Yeah, that's what I always thought about that argument. There's fundamental economies of scale that are the benefit of data centers that can't go away, right?
So what has happened when it comes to the edge, and then also I like to change the phrasing and refer to them as frontier markets, places that are underdeveloped. So rather than just thinking about edge nodes, we think about places that are underdeveloped and desperately need investment. So what I think is happening is development absolutely everywhere. In the midst of all this talk about the edge, we continue to see tremendous buildup of data center assets in the core hubs, and that can't be understated. That cannot be understated.
Well, as someone who lives in Loudoun County, I literally see it every time I drive somewhere, right?
And that's not just data centers. That's IX platforms, and that's cloud on-ramps and cloud regions. We still see cloud regions, major cloud regions coming online in major markets. I mean, I feel like Google just launched a cloud region in Paris, for example, for the first time. So we're seeing that. Oh, yeah.
Really?
Yeah, so we're seeing that. Yeah. But at the same time, we are seeing a mass of interest in underdeveloped markets, both in, relative and stable, economically strong secondary markets, some of these so-called spokes, sub-regional hubs, if you will, places like in Europe, a step smaller from the flaps, like Stockholm and Madrid and Milan. There's a lot happening in places like that.
Like brick before the last week.
Yeah.
Right. We're recording this in early March, so I think they remove the R from the brick.
Yeah, absolutely. But so you're seeing that too. At the same time, these what I'm going to call frontier markets are really on everybody's radar. And what I mean by that is, when you look at operators who are traditionally just in really mature markets, it's just saturated. The supply is massive. They're losing margin on their services, and they're looking elsewhere for increased profit margins, increased opportunity. And we have seen and will continue to see an incredible amount of interest in markets that I would even describe as outright volatile. Places that have never really fixed underlying issues that kept people from moving in to begin with, on the regulatory or operational end. Challenges dealing with getting access from subcable landings, backhaul to the local markets, local access within markets, dealing with regulators, dealing with equipment importation and things like that. We're seeing major international investment dollars going to places like those that are very difficult,
right?
And so we're seeing a great increase of interest in places like India, mainland China. I mean, throughout India, mainland China, Southeast Asia. Going back to the thing I was alluding to about overdependence on Singapore and Hong Kong. I mean, in Hong Kong, you have this obvious political situation that was really looking ugly until COVID came along and kind of put that on the back burner temporarily. And then in Singapore, you have regulatory issues that are adding to the sense that, wow, we're when it comes to networks, like redundancy, resiliency should be such a core part of what we do. Why are we all like continuing to throw all of our investment dollars into the same locations? We need to look elsewhere, especially since we know there are tremendous local populations in Southeast Asia, for example, that really want access to cloud and content that we have stored in Singapore. And we see these massive thriving peering ecosystems in these places. Yeah, it's difficult to do business, but there's tremendous opportunity. We know that they demand access to these services. As we increasingly rely on a cloud-driven world, the latency becomes a far bigger issue, and you have to be able to service many bandwidth-intensive applications as locally as possible. So,
Right.
we're seeing a lot of interest in Southeast Asia, Latin America, the Middle East, Africa, Central Asia. These types of locations are increasingly on the international radar. So it's an all of both and.
Yeah,
There's tremendous buildup within the existing
right.
hubs, and kind of a race to see who will deploy first in some of these other locations, because the catch with some of these smaller markets is that if you're the first mover, there may be tremendous opportunity to seize on the demand that's there. If you're the second or third, that market may already be saturated because it's not that big, and it's not going to get that big.
Right. Yeah, although if we get into some kind of Econ 201 sort of stuff about it, right, that you may grow the demand by having increased the supply, because then there becomes this network effect where some fiber providers who weren't there maybe now have interest, and then someone puts call centers there that weren't there, and
no
that kind
doubt
of thing,
about
right?
it. That's very true, but at the same time, we can see from other more mature markets that there's only so far those types of markets are going to scale, and that's really the issue.
Right.
You may have a robust demand that can be filled with smaller footprints by a few international providers, but they're not going to expand rapidly because, as we see from other sort of sub-regional hubs, that growth only goes so far. And the reason that international operators are so conservative about this is they know that, and they'll often move into some of these places via joint venture or acquisition, and it will often be at a much smaller scale than they would typically deploy somewhere else, because they see that forecast. There's great potential, but at a smaller scale.
Excellent. Yeah. All right. Well, let's shift gears a little bit and talk about the actual players themselves just briefly here. We've already talked a fair deal about the ones that everybody always thinks of, Equinix and Digital Realty and whatnot. When I read your reports, or if I read like Christian Cox, excellent newsletter that anybody listening not subscribed, they should. I'm always reminding me of. It always reminds me of just how long of a tail there is when I see M&A of all these companies that I've never even heard of in the first place, right? So can you just give us a brief overview of the main players, and then obviously not lists or anything, but just what does that very long tail kind of look like? Like, is it like the network market where, when I'm more familiar with carriers, and I mean, there's like everyone can rattle off, half a dozen key global network providers, but in the end, there's like 100, right? So I assume it's something like that.
Something like that. I mean, I think we have 800 operators on our database, and that's just what we've. Yeah, and I mean that's everything from small, very localized providers to operators that may operate like a really key ecosystem in one market, to operators that are nationwide, region-wide, and then global. And so it's really it's a lot to wrap your head around and try to keep an eye on. But there it is kind of a small grouping at the top, though. That's for sure. Like if you were to look at
exactly.
Overall footprint, you have hundreds and hundreds of operators, but on the primarily, so if you look at where Equinix and Digital Realty sit as kind of the prime retail and wholesale generally operators, each of those is like more than 2.5 times as large in terms of geographic footprint than their next biggest competitor. They are just massive. But then you have this incredibly long tail behind that, and Equinix and Digital Realty are also are really unique in that they have such an incredible presence across every imaginable geography. although more recently Africa.
Right. Just to your point that a lot of in those long tail, there's a lot of like very hyper focused
Absolutely.
geographic
So a lot of the
sort of just like in the fiber market, right? There's fiber providers that operate in one tier three city in the US and fiber providers that operate in 125
I
countries,
mean,
right? So,
in the US you have operators like Flex Central and CoreSite, CyrusOne, QTS, now DataBank, and others who are really hyper focused on the US markets and are really critical providers in those markets. Europe, you got Global Switch, although they have very much an international presence, a major presence in Asia too. There are a couple other really big ones internationally that it so happens. I mean, there are two Japanese operators that are both carrier owned that operate really major, important. I think so. Telehouse, owned by KDDI, and they operate the most critical carrier hotel ecosystem in the London market, in their Docklands facility.
Well, it was a UK company before KDDI bought it, right? So,
but that's a carrier owned business that, by and large, if you were to go to a telehouse facility, it's driven by KDDI mandates and their sort of business mission. But they own one of the most important carrier neutral facilities and campuses and the European market. Then you have NTT, which has this weird conglomerate of multiple companies that are under the same group and sort of compete with each other across the globe, and they're massive too. But their international division alone, I think, controls about 4.5 million square feet of data center space, and they're absolutely a major provider across global markets. And then, like I said, all these specific regional players as well are within one nation even.
Hey folks, this is Charles.
And Lizzie.
From TeleGeography. We have a quick aside before we get back to the show. Are you hiring in the WAN space?
It seems like everyone's either looking for their new position or they're trying to desperately hire for their department right now.
That's right. And if so, you might want to post your job to WAN Forum. If you haven't checked it out yet, it's a place for those who manage wide area networks and maintain IT infrastructure.
I've always found that going to industry-specific job boards tends to have a better success rate and yield a better crop of candidates compared to more general job boards. And that's exactly what we're trying to achieve by adding this new job openings area to the WAN Forum.
You can see what it's all about at wanforum.com. If you'd like a position to be posted to this community, shoot us a message at info@wanforum.com.
Now back to the show.
All right, so there's a lot of players out there, but it makes me think also of, again, the fiber market, and specifically in the submarine cable market. One of the big trends over the last several years has been that we've seen the content providers that were big users of submarine cables get into the submarine cable market themselves. I take it that a similar kind of thing, maybe it's a little bit different because it's long been at play, but is a dynamic in the data center market where you have the hyperscalers are often content themselves. Google, Amazon obviously come to mind, but that also have their own facilities. So they're leasing space from the neutral providers. They also have their own massive data centers. How does that all interact with what you track in the sort of neutral provider market?
Yeah, I mean, that's a really critical question because I think it gets to the core of what's driving a lot of the market. And then again, this plays very well with what we have been tracking all the way along at TeleGeography anyway. We've seen this transition in the network world where companies like Google and Facebook and Microsoft are absolutely, they determine what projects happen where to some degree and how those projects are configured. So we see this long haul transition from a pop to pop sort of model to a data center interconnect model where these major content providers are going to interconnect their facilities. And then on the data center side, absolutely, they are driving a major portion of the market. If you track what's been happening with cloud region development, I mean, if you look at just AWS, Google, Microsoft,
right,
their growth in the number of cloud regions over the last several years has just been incredible. I mean, we typically see year on year like 30% growth in just the number of locations that these guys are covering, and very aggressive growth. And as with the market side, they're working very much hand in hand with the industry. The network side, they're working with the carriers. Here, they're working with the data center operators. And my understanding, how you kind of break this down in terms of what their presence is and how they interact, you'll have the major hyperscale data centers that are built by companies like Google and Facebook. When we think about it, all this talk about the cloud, most of what they are doing at those facilities is supporting their core business. I mean, Facebook doesn't have cloud, but they have massive data centers for mirroring services.
Right. It's just a cost for them.
For Google, those data centers are being driven by the search business and YouTube and things like that.
Right. Interesting.
By far.
Really? That's really interesting, because I think of them because, where I interact with them is Google Cloud Services.
And I mean, no doubt that's certainly a faster growing business, but it's still a very much a minority of what they do.
Google is still the search engine.
Google Cloud is still very much a minority revenue share of the overall business. So what's driving those hyperscale data centers in places like Finland and other very remote locations is back-end storage for their core business servers. So
that makes a lot of sense.
And you have that. You have these proprietary data centers, as we'd call them, where they store their own services. Then you have these cloud regions where they will take some amount of wholesale capacity, perhaps at a single site, perhaps at a campus, relatively close to end users. So rather than being in the middle of nowhere, closer to an urban area, large scale wholesale builds, but not nearly as large as those massive storage and data disaster recovery sites. These cloud centers would be built closer to end users. Those are often, if not always, contracted by a wholesale data center operator who will build and operate those facilities. So that generates a ton of business for the wholesale players. And so that's a major way in which the cloud and content players interact with the wholesale market specifically. And then from there, you have these on-ramps, these dedicated Ethernet connections to more densely linked colocation sites, where they'll have edge servers that customers and partners can link up to and access the cloud services at these nearby regional clusters. So they interact across the spectrum, and they drive business across the spectrum for sure.
Just focusing on that a little bit, and this may be outside your purview, but I'm taking it from what you're saying that you might connect with, so your on-ramp might be in, say, an Equinix facility, which is then taking you to the AWS facility down the street, essentially, where the actual sort of cloud services happen.
That's my understanding. Yeah, absolutely.
Gotcha. That makes perfect sense to me then. So it's good that we agree. Excellent. All right. Well, let's, this is the WAN Manager podcast. Of course, I want to get a little bit on specifically kind of the enterprise perspective, although I think all of this background information is really good. An enterprise might just be interacting with this market in a way by buying infrastructure or platform as a service from a CSP. Although most of the enterprises that we talk to have moved their data centers off premises, or at least some portion of their data centers off premises. So they're setting up maybe even like kind of bare metal servers or something like that, or leasing server space in a data center, even if a lot of their compute is happening a market abstraction level above this, where they're paying AWS in a situation like I just kind of described. I think either way, it really would benefit you to know what the pricing structure is. So without getting into specifics, really, just can you give us like the basics of like how do you charge for these services? What is charged and kind of what does that look like?
Yeah. So the basic charge is generally based on power utilization, because as I'd mentioned before, that's kind of that's the premium cost within the data center. And in fact, you kind of look at power as a unit of real estate, because there's only so much power provision within a unit of space, which is the power density.
Right.
So,
right. We always think of the internet as just unlimited.
Oh, not at all.
Not at all. It is
it's a thing in a physical space, and it takes up resources for sure. Yeah, absolutely. And that is driven home just in the pricing structure itself. So how it would typically be structured is like a price per kilowatt for a cabinet. So you are ultimately charging for a unit of space, but the power reserved within that unit of space. So price per kilowatt for a standard cabinet of, say, 4 kilowatts. That's how you would look at the basic pricing structure. So that's the basic MRC baseline price. And then the other big component that you would charge, typically MRC, is the cross connect, which is the physical cable connecting the server.
A Cat6 wire that some engineer pulls down
and the
hallway,
beauty of that for the data center operators, they get to charge you monthly for something that just sits there.
That someone has to plug into a port one time,
so,
right? Although, to be fair, they are meticulously managed.
Yeah, absolutely. But there have been traditionally very different pricing models in the U.S. and elsewhere in the world. The U.S. has kind of always monetized that very heavily, at least in some of the.
Well, like in local access is by and large more expensive in the U.S. than the rest of the world for various reasons. So well, not the rest of the world, but then other developed markets,
absolutely.
I should say.
So those are the two big MRC things that I would highlight.
Yeah, that's really useful, I think. And something else that you mentioned earlier, but I think worth focusing a little bit more on now is that you mentioned that prices in this market are remarkably stable, which is sort of juxtaposed to them being almost always in a downward trend in the network space. Now, in the network space, we're dealing with something more like electronics, more like Moore's Law, where you're constantly able to increase the supply by increasing the throughput over the same fiber optic wire. Here we're dealing with more Econ 101 kind of stuff, where there's like land has a value and there's a finite amount of it. And every data center that gets built in an aggregation spot like Frankfurt or something like that comes at the expense of a future use of that land, right? So you see a different dynamic here where prices tend to be stable or potentially go up, right?
Typically, when we see prices go up, it's oftentimes in the short term in relation to some localized market dynamic or perhaps what's happening in one specific data center, but by and large, it's pretty stable. I'd say if we were to look at broad trends across geographies, what we've typically seen over the years. So we track pricing in pretty much core markets: Asia, Europe, the Americas, or particularly North America, and what we typically see is that when you look at the price per kilowatt, it's always going to be more expensive in the Asian hubs. Next most expensive, European hubs. Most competitive, US hubs. The cross connect prices tend to flip. US prices are the highest, followed by Asian prices, followed by European prices. So what's that mean in the wash? Like when you look at kind of a TCO model, your Asian markets are always the most expensive. Hong Kong and Singapore are just nosebleed expensive compared to everywhere else.
Gotcha.
But predictably, your average rates in US and Europe are going to depend on how many cross connects you have. So if you're only using one cross connect at the cabinet, it's typically going to be more expensive in your European hubs. Whereas if you're going to have multiple cross connects, it's going to be more expensive in your American hubs because those are so much more
You're
expensive.
paying less for power, but more
it becomes a much bigger component of your TCO.
Interesting.
Now within these markets, it can vary a lot. Some of these locations are quite competitive, so that the difference between what you expect to pay between operators isn't that great. In other markets, it's pretty high, and on average, I mean, there can be a swing of 200 per kilowatt between your low-end operator and your high-end operator in any given market. So pretty much no matter where you go in the world, you can bet if you're going to the premium ecosystem, it's going to cost you a lot more. But if you're an enterprise provider and you can shop and you have options for providers who are not in like the most expensive urban area and have your basic needs, can give you access to, a dozen or so carriers, can give you some kind of dedicated access at an acceptable distance to your cloud providers, your platforms.
Yeah. As long it's being a couple markets away won't change your latency that much.
Then it becomes a lot more competitive. Yeah.
Yeah, that's really interesting, and I think something worth benchmarking along with your network prices as well, to give that little plug, right? That it's important not just to understand what your network costs, but how that network interacts with the whole ecosystem too, right? So and that's something we could do. So that's really cool. Yeah. Excellent. Well, Jon, this has been really interesting. I just want to sort of close out with, anything interesting coming down the pike that you think we should look out for in the data center space?
Yeah. I guess I would highlight a couple of things. So first, I mean, I think, as I said before, we're going to continue to see incredible growth at key interconnection nodes and across the board, and frontier markets and in core markets alike. We're going to see an increased push to get cloud and content closer to end users. And that works out well for enterprise and everybody else, because rather than having to worry about how close you are to some what may be far-flung locations, you can bet that as time goes on and we see more services deployed to more localized locations, you'll be able to access what you need in a more localized area. It's great.
Well, especially with the work from home kind of revolution, that you might even have a lot of white collar employees. In fact, some very data and cloud service intensive white collar employees that have moved back to their home in Kansas or something like this, right? And so I think I definitely for all services, I expect to see nodes being pushed out away from the sort of traditional tier one market.
Yeah, one other thing I'd mention in closing too that I meant to touch on earlier is that I think that overall we're going to see a lot more regulatory scrutiny on this industry, and that's just something to keep an eye out for. So this relates to that whole issue that, these data centers are not just in the cloud. They take resources, they take power, they take land, and you're going to see more governments looking at the utilization of resources by this industry, crafting more regulations, and that will have the effect of increasing pricing in some very key locations and driving some development elsewhere. And we're already seeing that in places like Singapore, Amsterdam, and Frankfurt.
Now that's interesting. Markets where we expect to see some maybe additional regulation. I'm kind of skeptical of that in the U.S., given that on my end of things, in the network side of things, telecom, we don't really have real regulation since 1996, like when the internet was essentially being born. Right? So I won't hold my breath here necessarily.
Yeah.
So.
Well, you never know. I mean, I think we've just seen sort of the tip of the iceberg, and since we've seen this kind of scrutiny in some really key Asian and European markets now, it may only be a matter of time before they really start to look at this here as well. Yeah. You never know.
Yeah, well, especially with, things like crypto becoming kind of a political issue, which is really interesting. So,
and we certainly are seeing, I mean, that's a great example. We're seeing what a tremendous amount of resources that industry is using. And so that's certainly going to raise some flags.
Yeah. Excellent. Well, thank you so much, Jon. This was really informative. Any place in particular that people should catch up with you if they want to learn more here? Just find you at blog.telegeography.com.
Yeah, you can always hit me there. Connect with me on LinkedIn. Happy to connect with you there, and hopefully we can meet up at conferences at some point soon. We're trying to get back into the swing of that.
And I really looking forward to that personally. Definitely, sure. We'll see. If someone is looking for you on LinkedIn, I should point out, if you're not looking at the show notes, that your surname is spelled HJEMBO.
Yes. HJ, like Hjembo. Yeah.
Got that Viking heritage to give you funny sounds.
Yes.
Yeah. Excellent. All right. Thanks, Jon. Thanks for listening. The WAN Manager podcast comes from the team at TeleGeography. It's edited and produced by Jane Miller, and it's hosted by me, Greg Bryan. I also wrote the theme song that you're listening to right now. To learn more about our data, jump over to telegeography.com. Or if you want to get right into more WAN content like you hear on the show, you can visit TeleGeography's WAN forum at wanforum.com. We've got all of our podcast episodes over there, WAN Manager survey data, and extra analysis pieces. That's all for now. So until next time, WAN enthusiasts.